Good day, everyone. Today we will be looking at Module 11 of the analysis of the Nigerian Tax Bill 2024. In this module, we will be looking at economic impact of the chapters. We'll be looking at the economic impact of the 9 chapters. So let us go straight into this. Now, the Nigerian Tax Bill 2024 is a landmark reform aimed at modernizing Nigeria's tax system by consolidating outdated laws, expanding the tax base, and introducing progressive policies. The bill seeks to improve revenue collection, promote equity, encourage investment, and support sustainable economic growth. This analysis delves into the economic impact of the chapters and schedules, highlighting their transformative potential for Nigeria's economy. So let us look at chapter 1, the economic impact of chapter 1. Now, we have streamlined tax system. Consolidation reduces administrative burdens, promoting efficiency and compliance. So by consolidating multiple tax laws, administrative burdens on business and individuals are reduced, leading to improved compliance and efficiency. Number 2 is nationwide standardization. So a uniform tax system creates certainty for businesses operating across multiple states, encouraging investment and economic activities in underdeveloped regions. So these uniform rules reduce disparities across states, encouraging businesses to expand into underdeveloped regions. Now, 3 is that the economic impact of chapter 1 is its increased revenue transparency. Because a single framework minimizes loopholes, ensuring tax revenues are properly accounted for and allocated for national development. So this actually creates a predictable and business-friendly tax environment, fostering investment and economic activity. So let's move to the economic impact of chapter 2, taxation of income. 1 is fair contribution from corporations and individuals. So the taxation of profits and diverse income sources ensures equitable revenue generation. So by broadening the tax base, it ensures corporations and individuals contribute equitably. So by broadening the tax base, it ensures corporations and individuals contribute equitably. Now, with respect to number 2, we're talking about the digital economic inclusion. So taxing digital assets and services captures revenue from previously untapped resources. Yes. So taxing these digital assets and non-residents with significant economic presence tap into previously untaxed income stream, expanding the tax base. Now, business growth support. Lower tax rate for small companies foster entrepreneurship and job creation, especially in the MSME sector. So, and the economic impact of this is that it also expands government revenue while supporting small businesses and adapting to the modern economy. Chapter 3 now, taxation of petroleum operations. Now, this chapter helps maximize revenue on natural resources, or maximize revenue from natural resources. The hydrocarbon and petroleum profit tax ensure the government derives significant revenue from the oil and gas sector, a very critical pillar of Nigeria's economy. So the hydrocarbon and petroleum profit taxes generate significant revenue from oil and gas. And with respect to encouragement of efficiency, so we have operational efficiency, cost reduction or cost deduction, cost reduction limits incentivize efficiency. Now, limitation on cost deduction encourage better operational efficiency among oil companies. Now, with respect to investment incentives, production sharing contracts and incentive for offshore operations encourage continued investment in Nigeria's energy sector. And the economic impact of this is that it sustains critical revenue streams from the oil sector while promoting efficient and sustainable um, practices. So, chapter 4 now, we look at relief from double taxation. And if you look at it, this actually ensure Nigerian and foreign entities are not double taxed, which will lead to foreign direct investment. So this also help with cross-border investment facilitation because double taxation reliefs foster foreign investment by ensuring that Nigerian residents and foreign entities are not taxed twice on the same income. Now, global competitiveness by aligning with international tax treaties, Nigeria enhances its reputation as a favorable destination for multinational enterprises. Now, for chapter 5, stamp duties. Stamp duties, revenue from high value transaction. So, taxing dutiable instrument ensures that high value commercial transaction contribute to government revenue. So, taxes on high value instruments contribute to government revenue. Now, support for low income transaction. Exemptions from small value transfers protect low income individuals. Support for low income transactions. So this exemption for small value transfers protects low income individuals. And the economic impact of this is that it improves revenue collection without overburdening small businesses or individuals. Number 6, value added tax framework. Value added tax framework. Now, the value added tax framework increased revenue generation, and this is as a result of the gradual VAT increase to 15% by 2030. So the gradual VAT increase will provide sustainable funding for social and infrastructure programs. Now, with respect to digital inclusion, VAT on digital services captures revenue from cross-border transactions. It also protects low-income households. So exemptions on essential goods reduce the tax burden on vulnerable groups. Now, the economic impact of this is that it balances increased revenue collection with social equity and supporting economic resilience. Supporting economic resilience. So the VAT exemptions for essential goods like food and medicine protect low-income households while ensuring that luxury and non-essential goods are appropriately taxed. Now, chapter 7, which is on excise duty on services, introducing excise duties on telecommunications and gaming generate revenue from fast-growing industry, reducing reliance on oil revenue. Reducing reliance on oil revenue. And now, with respect to currency stabilization, taxing off-market foreign exchange transactions help control currency speculation and stabilize the naira. And the economic impact of this is that it expands revenue sources and strengthens fiscal and currency stability and currency stability. Still on encouragement of compliance, monthly duty collections also ensure a steady revenue flow and enable more consistent monitoring of service providers. So chapter 8 on tax incentives, stimulus for priority sectors. So incentives for sectors like agriculture, healthcare, and technology encourages growth in industry critical for Nigeria's economic transactions, critical for economic transformation. Sorry. So incentives for sectors like agriculture, healthcare, and technology encourage growth in industry critical for Nigeria's transformation. Economic transformation. So Incentive for agriculture, healthcare, and technology drive growth in priority sectors. With respect to promotion for research and development, research and development deductions foster technological advancement. It fosters technological advancement, allowing deductions for research and development, foster innovation, and position Nigeria for long-term competitiveness in the global economy. Now, support for philanthropy and social impact. Now, deduction for donations encourage corporate social responsibility, which eventually leads to more philanthropy support. And the economic impact of this is that it boosts key industries, fosters innovation, and promotes sustainable development Now, this is the last chapter, which is general provisions. General provision with respect to economic certainty, provisions for mergers, acquisition, and restructuring reduce transaction uncertainty, because there are clear rules for mergers and restructuring provision. So there are clear rules for mergers and restructuring which reduce transaction uncertainty, and it also helps in combating tax avoidance. So provisions against artificial transaction safeguard the tax base. So rules that are targeting artificial transactions and related party dealings prevent tax base erosion and profit shifting, ensuring Nigerian retains its fair share of revenue. Now, on regulatory alignment, supremacy clauses ensures consistency in tax governance. So the supremacy clauses and the authority to make regulations allow for better harmonization of tax policies, improving overall economic governance, including overall economic improving overall economic governance. Now, let's look at the economic importance of the schedules now that we've looked at all the chapters. Economic importance of the schedule. First schedule, capital allowances. It can, these actually encourage capital investment. So allowing tax relief for machinery, buildings, and software incentivize businesses to invest in productive assets, boosting economic growth. So this tax relief for productive asset boosts industrial growth, sector-specific growth. Special provisions for agriculture and mining stimulate activity in sectors vital for job creation and export revenue. So the export processing and free trade zone entities, it promotes export growth, because the tax exemptions attract foreign direct investment and enhance Nigeria's trade competitiveness. It also helps us, the incentive for export-driven production increase foreign exchange earnings to improve trade balance. So third schedule now, which is deductible interest, which prevents over leverage, So reduction of excessive leverage, limiting interest deduction discourages over reliance on debt. So now for the third schedule, deductible interest prevents over leverage. So caps on interest deduction promote financial stability, and then support for financial institutions too. Exempting banks and insurance companies ensures that critical financial intermediaries continue to operate efficiently. So support for financial institutions is also very, very key. So, and then the exemption for banks and insurers ensure efficient capital flow. Now, fourth schedule, individual income tax rate. One, for the fourth schedule, progressive taxation. By taxing higher incomes at greater rates, the system reduces income inequality and ensure fairness. It also supports low income earners. So tax-free thresholds protect the most economically vulnerable groups, promoting social equity, promoting social equity. Now, fifth schedule, income from settlement, trust, and estate. So, fair taxation of wealth transfers, ensuring taxes are paid on trust and estates, prevents wealth concentration, and promotes equitable economic opportunities. Sixth schedule, production allowance and cost ratio limit. Limits on deductions prevent cost inflation, securing fair government revenue. It it prevents cost inflation. So that is the efficient use. If you look at the production allowance and cost price ratio limits, efficient use of natural resources, limiting excessive cost deduction ensures fair government revenue from oil and gas operation while maintaining profitability for investors. While maintaining profitability for investors. And limit on deduction prevent cost inflation, securing fair government revenue. For seventh schedule, petroleum royalties. Petroleum royalty. Under seventh schedule, incentivizing challenging projects. So variable royalty rates based on production conditions encourage investment in frontier fields and offshore projects, enhancing energy security. Enhancing energy security. Um, this particular seventh schedule, um, it also help incentivize investment in frontier and offshore field. So for eighth schedule, revenue diversification, royalties from solid minerals provide a steady revenue stream. So royalties from solid minerals provide alternative revenue streams by helping with economic diversification. By helping with economic diversification. In the last module, I explained that I explained that I explained that the ninth schedule, 10th schedule, and 11th schedule had tables that you can easily navigate and read in the tax bill. So here we'll be moving from 8th schedule to the 12th schedule, items with suspended VAT, which is the 12th schedule. Now, support for renewable energy. VAT suspension for renewable energy equipment encourages investment in cleaner energy, supporting Nigeria's transition to a sustainable energy figure. So this VAT relief supports clean energy initiatives and reduces costs in critical sector. So 13th schedule, which is on determination of residence, clarity for multinational employees. So clear residency rule, simplify compliance for expatriates and multinationals, reducing disputes and fostering economic integration. So this clear residency rules reduces disputes and align with international standards. So let's look at the overall economic impact. On revenue growth, the bill expands the tax base by addressing untapped income sources, enforcing compliance, and introducing progressive rate increases. Now let's look at the economic diversification. The incentives for non-oil sectors and royalties on solid minerals support long-term resilience. Now, foreign investment attraction, tax incentives, clear residency rules, and double taxation relief make Nigeria a competitive destination for international business. On social equity, progressive taxation and VAT exemptions on essential goods protect vulnerable groups while ensuring higher earners and non-resident entities contribute fairly. So that protects low-income households while ensuring fair contribution from higher earners. And this revenue help fund infrastructure, education, and renewable energy projects, fostering inclusive growth. So revenue from excise duties, VAT and production royalties fund infrastructure, education and renewable energy projects, fostering long-term growth. Now, in conclusion, the Nigerian Tax Bill 2024 is a transformative reform designed to modernize and strengthen Nigeria's fiscal system by addressing economic diversification, revenue optimization, and social equity. The bill positions Nigeria for sustainable growth and global competitiveness. Now, the call to action with respect to this is that for businesses must adapt to the reform tax structure and leverage available incentives. For investors should explore opportunities in priority sectors benefiting from tax incentives. Now, government should also ensure effective implementation and enforcement to maximize the bill's impact. So, the Nigerian Tax Bill 2024 lays a solid foundation for equitable and sustainable economic governance, unlocking Nigeria's full potential in the global economy. Thank you for joining us and see you at the last module. Thank you.